How hard is it to invest in Chinese stocks now with all of the events of the last year or so?
I think it's always been true that the Chinese government is a player in any Chinese investment. I think what the last year has brought out is those people who are in denial about that fact have woken up to that reality. So I think what happens then is investing in a Chinese company becomes a joint test of what you think about the company and what you think about the Chinese government.
And your take on that is what?
My take is that, you're going to get people who really are predisposed not to trust the Chinese government, entirely walking away from the market. And those people who are predisposed to think that the Chinese government is a beneficial influence buying stocks. So it's almost, you're going to get a split, not so much in what you think about companies and the economy. You're going to get a split based on what you think about the government.
And so, Professor, if you're an investor and you're trying to evaluate some of these companies, how do you do so? How do you apply normal valuation metrics to companies that aren't operating as normal companies would in a free market capitalism society?
They are operating as normal companies, but they're operating in a market where the Chinese government, if it chooses to, can make life very difficult for them. So you almost have to make an assessment of how difficult life can get for them looking forward. And the more difficult you see the pathway getting, the more you've got to avoid those companies. So if you look at Tencent and Alibaba and Didi and JD.com, which are the four companies that I looked at, you can see varying degrees to which the Chinese government can either get in the way or help them along. And I think what you're seeing today with Didi illustrates how much of an influence then the Chinese government can have on whether your stock goes up or down.
Looking closer to home, Professor, what's your take as to whether U.S. equities will yield very good returns for investors buying today over the next decade?
Well, based on what we're paying for stocks, I mean, what stocks are signaling, about 6% returns on an annual basis, which would be shocking for anybody who'd invested in stocks 10, 20, 30 years ago. But here's why we're okay with it. When T-bonds are making 1.3%, 6% doesn't look bad. So I think from that perspective, given that our choices have become so meager, stocks don't look bad. But if you compare them to any time in history, you're going to step back and say, hey, this doesn't make sense. But we're not investing against history. We're investing against what's out there right now.